Trading. Hope you are well. Today is Friday, October 28th, and I'll be analyzing Fortescue Metals, which the SX code is FMG. This is a high-level analysis in which we're going to be talking about the fundamentals of the company at the moment, the technical prospect from the chart formation, especially, and also a little bit about macroeconomics. So let's have a look what's happening behind the scenes with Fortescue. Just on a reminder, this isn't financial advice, it's just us from BG Trading sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, stop losses, much more on this channel. So if you like, please subscribe and also share these videos from one that you believe could be interested. Now, let's first start understanding what's happening with iron ore prices. As you know, it is in decline at the moment. Iron ore price has been slammed over fears of a worldwide recession. And as you can see from this last article, just about 24 hours ago, iron ore price currently trading around 87 US a ton. And that what happens with the with Fortescue stock, basically the difference between a company that sells its commodity at $87 and sell at $150, then is massive, and then that directly affects the revenue and obviously the margin, the profit of the company. In fact, we could see already that on FY22 financial results, which came much lower than FY21 when iron ore prices was at the highest. Now, this year, last financial year, FY22, the company revenue was in $17 billion, whereas in FY21 was $22 billion, with decline also on the net profit, which was $10 billion in FY2021, and now $6.19 billion, which is down. Nevertheless, dividends is still pretty high, which makes this stock a very high yield stock, around 12%, even more with today's stock price lower, around 14.50. Now, the problem is when you look into, and that's why I'm analyzing this based on our VIP members' request. When you look at stock that has really high yield, you really got to ask yourself, okay, are those dividends sustainable? Is the company still going to be generating growth on its sales, and the company will still generating growth or sustainable net profit? Which in this case with Fortescue, I believe that will be a further downgrade on net profit and on its revenue, simply because iron ore prices are heading lower, or at least going to be stay lower. It's hard to predict commodity price, but provided that the world is sort of entering into a recession, mostly caused by hike of interest rates, and China also into sort of financial crisis as well, as they speculate, I don't see iron ore price going back to levels of 2021, at least for the next 12 months. And that needs to be factored on the price. Okay. So macroeconomics is a little bit gloom and doom for iron ore prices. So I wouldn't be investing on this stock at the moment, despite remarkably high yields on that. So is BHP and Rio. Obviously, those two are the stocks, they are more diversified. Another thing I wanted to you guys to keep eye on it is that Fortescue is looking into lithium space. Potentially, we'll see some acquisition of some project, or even the company developing some lithium mine themselves. If that happens, obviously, it could help to boost back the share price on speculative side of the spectrum, which means we could see even potentially acquisition of companies like Australian-based companies. Who never know. I would this is really pure speculation, guys. I would even say, what if, for example, Fortescue decides to buy Core Lithium, for example, which is Australian-based project and is already online? Could happen, yes, could happen, and that could obviously decrease the net profit because the company will be making a massive acquisition, but also not massive, but a pretty decent acquisition, but also. And then that will be invested there until we get the revenue back for to balance out this growth investment. But we never know what's going to happen. But just keep an eye on renewable energy for Fortescue projects. That could help to pump the share price as well. But if it is to do with iron ore itself, I would be doomed. I would be looking at not buying this stock for a foreseeable future. Now look at this. On our it's down 7.5% today. If you're part of our free Facebook community, Buy, Grow, Sell Strategy for Share Traders, which I invite you to become a member now if you're not yet. 2 days ago, I spoke about Fortescue metal groups in there, and I point a lot of red flags. That sorry, not 2 days ago. That was yesterday. A lot of red flags ticking, and I was talking about how much pressure of sellers against the $16 level, which happens to be breakout today, impressively. All right, so that was a very good prediction, which is interesting when that happened. And then that was happening. If you look at this, that was yesterday until we had this breakout today, which is down 7%. Now, what is the next hypothetical support level? If you've been following us long enough, you know that we normally don't make much decisions based on hypothetical support or hypothetical resistance. But with blue chip stocks like these, like high market cap companies, it tends to work pretty well. So I would be suggesting here $14 would be the next hypothetical support level. So buying around $14, despite this a downturn, provided that we're buying $14 or under, we could see a bounce back of the stock. If the market bounces back, could see a 20% bounce back around the SMA levels again. No, sorry, apologies for that. Wouldn't be at 20%, would it be about 18%. So let's say for a safe trade, I would be aiming for a 15% trade on this downturn. Remembering that trading on a downtrend, it's a little bit riskier, but can be very profitable, and we have been proving in the past. So I will be looking at 15% bounce from $14 level. I'll only be touching on this stock. I would be touching, not saying that I'm going to buy this stock. I'll be looking at buying only at 14 or under or below, because I still could see this at $12 price. And most likely we will see Fortescue on $12 price if this downturn doesn't reverse. Okay, but for the meantime, $14 is a pretty interesting buying price, and definitely trading what we would say technically discounted price. Obviously, keep eye on iron ore price and potentially other renewable energy projects on for Fortescue, potential acquisitions or development of new projects. Okay, this is my thoughts on Fortescue. Breakout of $16. Hypothetical support, most likely we'll see at $14, potential buying area $14 or under for 15% bounce back. That's what I think is going to happen with Fortescue Metal. That would be my next trade if I do trade Fortescue. Hope you enjoy. Let us know what you think. Thank you very much and have a great weekend, guys. The whole idea when we designed BG Trading BGS 20 strategy was to use only a set number of indicators to make it simple and clear to understand and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course.